South Africa Business and Finance News, the 9th of July 2026. Global risk aversion dominated financial markets this morning as escalating tensions in the Middle East unsettled investors. Sentiment deteriorated after the US declared its interim peace arrangement with Iran effectively over following the latest military exchanges in the region. The renewed uncertainty has weighed heavily on risk-sensitive assets, with emerging market currencies, including the South African rand, coming under pressure. The rand weakened to a one-week low of around 16.38 cents against the US dollar as investors sought the safety of the greenback. For South Africa, a net importer of oil, the combination of a stronger dollar and rising crude prices presents a significant challenge, increasing the risk of imported inflation. Oil prices surged by more than 5% to a two-week high after military strikes involving US sites and the Strait of Hormuz raised concerns over potential supply disruptions. At the same time, gold prices moved higher as investors turned to the traditional safe haven asset. The cautious global mood also filters through to local financial markets. The JSE Top 40 index opened about 1.3% lower, extending the pullback after reaching record highs earlier this year. In the bond market, South Africa's benchmark 2035 government bond weakened, with the yield rising 7.5 basis points to 8.305%, reflecting the higher risk premium investors are demanding amid heightened uncertainty. On the domestic front, today marks the conclusion of the National Treasury and GTAC 2026 Public Economics Conference, where Finance Minister and SARS Commissioner have emphasized the use of data-driven policy solutions to address youth unemployment and improve labor market outcomes. Cabinet also published a draft strategic petroleum stocks policy for public comment. The proposal introduces a mixed stock holding model that would require the South African National Petroleum Company (SANPC) to build strategic fuel reserves equivalent to 60 days of net imports, with the longer-term goal of increasing this to 90 days. The policy is intended to strengthen the country's resilience against global oil supply disruptions such as those currently affecting markets. There were also some encouraging news on the competitiveness front. Cabinet highlighted South Africa's improvement in the 2026 World Competitiveness Yearbook, with the country climbing to 54th place from 64th place in 2025. The gain reflects progress made through structural reforms and ongoing infrastructure investment initiatives. Overall, today's trading session is expected to remain driven by a stronger US dollar, elevated oil prices, and continued demand for safe haven assets. While short-term volatility is likely to persist, long-term investors continue to favor diversified portfolios as the most effective way to navigate an increasingly uncertain global environment.